Okay, hello and welcome everyone, and hope you guys have had a good weekend. Today is the 22nd of August 2022 already. It's been moving really fast with the days and the weeks, and we are ending August very, very soon. We are the last week of August. So we've got loads to discuss, especially on a Monday, and this is the Breton's Monday week ahead review. And we are going to be looking at fundamentals aspects, what would actually be moving the market as well, and various other aspects and factors that would be actually catalysts towards moving the market. And then we combine that with some technical analysis, trend analysis first, and then technical analysis as usual. So what I would like to start off with is always to look into the sentiments of the market, whether it's risk off, risk on. But because it being a Monday, it would probably be best for us to also highlight some very important fundamental aspects of movers or factors in the market. Now, one of it is has got to do with the inflation situation in the States, especially, and also globally. Now, what is in our research within the team, what we have actually found out is that the market is gearing towards expectations of inflation going to the downside, meaning that they are going to cushion, most probably cushioning the situation on inflation, especially in the States, and hence the reason loads of investors and traders, they are eyeing the event at the Jackson Hole, which will be a very, very big event, and that would actually be impacting the movement of course, USD crosses, but also decision making on inflation situation with the treasury bonds, especially as well, and various other economic related situations and factors will be discussed in that Jackson Hole meeting. So I just want to take you through there so that we are aware that that Jackson Hole meeting will actually be taking place on a Saturday next week. And that is basically, that will be on a Saturday, August the 27th. And as you can see, we've got the Jackson Hole Symposium. Now, of course, we want to always look ahead for all these trading days, but this is what the market will be gearing towards to as well. And you will see that the news, will actually be talking about these expectations on the Jackson Hole Symposium, or in the Jackson Hole Symposium. So what will be discussed and what other things that will actually be highlighted on this day will actually pave the way for next week's high volatility expected next week onwards as well. But of course, the momentum and the buildup of liquidity and the buildup of momentum in relation to volatility of the market will start this week itself. And as we can see, we have got the Monday that have actually been started by Chinese interest rate decisions. So as we have mentioned before, when we look at a high volatility or high impact data release from China, then that would actually sort of be connected and should be connected in your minds as traders to antipodian currencies like the Australian dollar and the New Zealand dollar as well. So this is what has had happen or have had happen last week, where we had more Chinese figures that actually came out and that actually sort of impacted, as you guys have actually seen, Australian dollar crosses and New Zealand dollar crosses, and they have actually moved quite a bit. And it didn't really correlate too much on other commodity currencies like the ZAR, for example, or the Canadian dollar, not too much at that side, but it looks like it's ending now with the commodity currencies action with Australian dollar and New Zealand dollar and all that. So my guess is this week onwards, the focus would actually be on economic data releases that are high impact coming from Europe, especially. So we want to look at Euro crosses quite a lot. We want to look at the current economic conditions, especially with the top three economic superpowers like Germany, especially France and Italy. So these three countries are going to be dominating what could actually potentially happen with the global, not global, but the European Union economy as a whole. You see, so these three countries are the driving forces. So we want to look at these ones. And coincidentally, of course, when we see that shift of fundamental news that would actually impact the market coming from Europe, we could see that potentially was mentioned last week as well on various news factor coming from Europe, gas prices going up and, inflation, and whether or not, the question is whether or not the Eurozone will actually fall into recession sooner than expected. And coincidentally, that theme is also being discussed concerning the States as well. So there we go. We've got a chance to experience high volatility, of course, high liquidity in the market as well, which basically means a good chance of spotting trading opportunities, of course, starting this week, midweek onwards, I would guess, but anytime starting end of the trading session of today, because we've got loads of traders and investors, of course, retail traders included. They are gearing towards, trading euro crosses as well, and we have got, coincidentally, tomorrow we have loads of euro data, economic data coming from Germany in particular, also euro as a whole, S&P Global Composite PMI, but that is followed by the Germany's specific BME manufacturing or PMI index, and composite in PMI indexes data coming out tomorrow, Tuesday, August 23rd. So as you guys can see, we have got this end of commodity currencies type: Australian dollar, New Zealand dollar, Canadian dollar. All these are commodity currencies, ZAR as well. I would guess that the interest into these pairs of volatility may have actually ended in a bit, ended in a way so it could actually flow into the euro and USD crosses. So the USD crosses and euro crosses together with GBP crosses as well would actually be in focus, I would guess, this coming week. And because of that intensity and focus on inflation figures, GDPs, and all these various high impact economic data release, I would then look at the impact onto gold in particular. So gold as well technically has got some support areas that we are focusing on. Coincidentally, that would actually be working hand in hand with what the United States of America, they are planning to cushion the impact of inflation. So reducing rates a little bit or something like that. Maybe they'll come up with some other mechanism within their economic model, for example. But the idea or the outcome is actually to reduce inflation. So when you reduce that inflation and that inflationary rate, or cushion that inflationary rate, then the true rates or real rates of the US dollar would also be going down. So with that parity or negative correlation with the rates and the real value of gold would actually be on the opposite side, expected to go up as well. But what I would look at is probably volatility and liquidity would actually be coming into US crosses to actually jerk the movements of gold's prices, and that could literally be a nice sideways type movement for gold, just awaiting more solid decision coming out of the symposium. So the symposium will be happening only on Saturday. So I would guess next week onwards, on Monday, we would be looking at gold trading quite nicely in terms of opportunities to trade gold and silver perhaps, but gold in particular. And we want to also look at other commodities, of course, but crosses, US crosses, Euro crosses, GBP crosses, and basically these three major crosses would actually be something that we need to look out for starting from now, from today onwards, and monitor them and look at trade setups from a technical perspective as well. How I would always see the trading processes especially with trading opportunities, is the fundamentals would actually act as a fuel to actually drive volatility and liquidity. And your technical analysis would actually then confirm, the build-up of trend from a technical perspective, so that we can then look at trade setups and aimed at take profit areas, and also, resistance areas that would actually help us to spot, risk areas as well, and also your take profits area before reaching these levels. So this is my take on the market for this week, starting from today, and it's going to be quite a neat, nice, what do you call that, build up of momentum in my guess as well, especially with all the questions coming up globally about recession, about the inflation, current inflation rate as well, about gold prices, of course, and about the global economy as a whole. So it has been marinating for the past 3-4 weeks, maybe a month or so, and it has actually come to a point where they would like, globally, various countries, traders and investors included, they want now a solid decision-making model. So they would actually base on what's been, going on, of course, but what will be going on in terms of events, especially this week, that Jackson Hole Symposium, as well as what is expected, what are expected in terms of economic data for this whole week. So let's just take a look a little bit on Tuesday, tomorrow, August 23rd. Of course, we've got, as I've mentioned, a series of high impact, high volatility data releases, mainly majority coming from the Eurozone, predominantly Germany, which is your first superpower, or economic superpower that's driving the force of the whole Euro Pact as a whole. So we have got also ECB's Panetta speech, really important. We've got the global composite. This is a Euro side of it, but then we've got two very high impact data that's basically there. S&P Global, BME Manufacturing, PMI right there as well. So that's these ones here are really to look at, because it would sort of overlap and then follow through with the generic Euro data. Okay, so that's on Tuesday, August 23rd, which is tomorrow. Then we go through Wednesday, and Wednesday we've got the durable goods orders, also quite a significant data that's correlated to GDP, GNP as well, various other consumer prices index. So everything's connected with durable goods orders as well. And this is for July. This comes out monthly. This is classified, categorized as high impact as well. So it measures basically, as you guys can see, the cost of orders received by manufacturers for durable goods. Okay. All right. So there we go. I'll just take that off. And then we have got the non-defense capital goods as well. So we've got two data right there, two releases on the economic data that's coming out tomorrow. That's August 24th. So we still have got USD concern right there, but starting on Wednesday. We've got some medium impact one tomorrow on Tuesday. We've got none on medium impact or high impact. We've got medium impact today. That's the Chicago Fed National Activity Index. Now, Chicago usually is correlated to commodities and commodities movements, especially. So a lot of traders, I just want to pinpoint or point out this fact that most traders, retail traders especially, they get a little bit confused with currencies and their trading centers. So the most active trading centers for currencies is London, not Chicago, not New York. For New York is actually equities, and for Chicago is actually commodities. So we just want to get that right as well, because sometimes when we sort of make a mistake by looking at US closed down for any public holiday, then we think that the currencies market would actually be impacted and not moving that fast and stuff like that. But usually that's the total opposite, when the states basically would not even impact so much. But if London is actually off and London is closed for a bank holiday or something like that, then yes, it would actually impact the currencies market, or the flow and the liquidity and the volatility of the currencies market, especially FX. Yeah. So yeah, I just wanted to point that out. Okay, so we've got Tuesday covered, Wednesday covered as well, just to give you a bit of an idea. We've got a bit of a longish type docket concerning New Zealand dollar, especially on the high impact on Thursday, August the 25th. So we've got high impact data on retail sales coming from New Zealand. We've also got the GDP annualized one that comes from the States, together with the Jackson Hole Symposium. So we've got a Jackson Hole Symposium starting on Thursday. It's an event that basically follows through and then ends and gets summarized in the weekend on Saturday. So this is really very, very important one to look at, because it starts on Thursday, August 25th. And as you guys can see here, if you click on it, it gives you a little bit of some detail right there. Frequency irregular. It's got its source coming from the Federal Reserve of Kansas City. So that's where the area is. Reserve Bank of Kansas City since 1978. So that's your Jackson Hole Symposium. Then if you look at Friday, we have got that very, very big speech that is expected by investors, and it would actually then impact their decision making as well, because interest rate decisions does actually impact to a very, very big, big momentum onto investors, bond investment as well, and various other things, a whole situation in the States especially. So this is very long awaited, and this is going to be a very high impact one, which would also be impacting gold's movement. So we don't actually know whether or not from Thursday onwards we would actually be looking at some sparks and some breakout of gold maybe or not. We don't know that yet, but for sure I would guess next week onwards it would actually be marinating all these movements and then create a very big blast in terms of trading opportunities for us through the volatility and liquidity of the market. So yes, and then we've got Jackson Hole Symposium, as you can see right there, hand in hand, really very, very big impact. And then we have got the Jackson Hole Symposium there on Saturday as well. So it's got a couple of days that it's running through from weekdays right to the weekend on Saturday. So when anything happens high impact wise on Saturday or Sunday, we could always see a larger gap up or down, and would actually be impacting the trend for the whole week as well for the upcoming week. So there we go. We've got a nice docket of economic data releases. This is the fundamental side of things. We don't really need to look into each one data at this stage, mainly because we will be providing traders and you guys with videos in the dashboard itself explaining all these, and the tutorial side of it will take care of that online. So you will have your self-paced learning on details concerning each one economic data, what is it correlated to, and how do you actually read it, and what are the best ways to actually predict the markets and correlated pairs and instruments that would be impacted. All that could actually be covered in the video tutorials itself, but it is important for us to know what's high impact, and then we confirm that with the tools, and then we do a trend analysis, and we pick the right pairs to actually trade. And that's basically that whole process following the PRICE or price trade plan, okay, as your sort of guideline step sequence to analyze the market. So we are analyzing the market, combining fundamental analysis, of course, like the fuel to the market. So we want to understand what are the hot events that are happening that would actually fuel the market, creating volatility, creating liquidity as well. And then we are able to conduct the technical analysis, trend analysis first, and then technical analysis once we have actually picked the right pair also, or the right instruments to trade for the day or for the week or for, medium to long term as well. Okay, there we go. Good. So any questions so far, guys? You guys are all clear on the fundamental side of it, and then I'll take you across the bridge to go over to technical trend analysis and technical analysis as well. But after we have actually looked at some of the tools in Action Forex right here. Now we've also got the Forex mirror, as you guys can see, being sponsored by TenTrade right here, will be incorporated into the dashboard as well as your source of fundamental or news data, right? So all these news are aggregated from several sources coming into Forex Mirror, but Forex Mirror will be incorporated as your fundamental type tool and news source within your dashboard at Ten Academy. Okay, right. So here we have got hot stories right here, and we want to always just look at the title or the headlines, and then we can sort of mirror it with what's happening or what's to be expected in the economic data releases as well. So you guys can see that gold is one of it that has been focused on. So that usually relates to very big data expected from the States, or speeches, symposium, and all that. So what's going on there would always have the correlation to gold's movement, but they won't tell you that. So they will just have gold, news and breaking news mentioning gold. If not, why is gold on there, right? So every time when you look at, this is another way to have your mind trained and conditioned to actually connect the dots. So we have mentioned earlier on that if we were to go into the economic calendar and then we look at high impact Chinese data, then you want to connect that with possible movements to be expected coming from Australia and New Zealand as well, because that's where the dots are connected, right? And the same goes for big events, high impact events, risk events as well that are going on in the States. So when that happens, especially fundamentally, economically as well, and if the relation is got to do with interest rate decisions especially, then it would trigger and impact gold's movement. So then we know that, okay, we need to also monitor, look at opportunities, trading opportunities coming for gold as well, right? Okay, so that's basically it. Then we have got US 500 retreats, it says. For gold, it says it's back near falling trend line. Now, what is this trend line and where is it really? So what we can then do is use only the headlines to point us to gold, and then we enter gold's technical analysis, and we do it collectively, and we'll guide you through onto analyzing gold from a technical perspective. Then we look at whether or not the trend for gold technically is clear and smooth as well, and then do we have any levels that we need to be aware of technically. Basically, we are sort of matching what we have read as top news or hot stories, as you can see here, and then we want to combine that with our personal analysis technically onto that instrument itself. In this case, it's gold. And then we have got the US 500. It says that it retreats after hitting 200 SMA. That's a simple moving average. We may not be using the simple moving averages because we've got the exponential moving average, 50, 100, 200, but it's more sensitive and basically it's sharper if you're using your exponential moving averages. But it is within our control to actually confirm whether or not, what is this news trying to say? It's hitting the 200-day SMA. So could we also see it hitting one of the EMAs of us, of what we apply onto the screen? So when that does actually happen, the EMAs or SMAs usually could also function as a support level or a resistance level. So we need to firstly understand for ourselves first, what is the trend? And when we understand the trend, then we can actually, match with whatever analysis as well that is actually going on. But we need to do that trend analysis personally first with our own ways and style. Okay, so we've also got the preliminary global manufacturing. So you see all these headlines have actually been selected to be the hot stories. And this is important because investors and traders, they are demanding these kind of hot stories to be picked. So Forex Mirror, it's got a good ability to aggregate all the news coming from various sources and then have it summarized as top news. And as you guys can see, you have got silver here mentioned as well, and then you've got GBP JPY 6 support, USD CAD breaks resistance. Okay, so we've got some there. Now what we want to do then is, if we are looking at GBP JPY here mentioned, USD CAD here also mentioned, we need to also look at the tools, especially on Action Forex. All these tools are going to be incorporated within the 10 Academy dashboard. So you don't need to, we don't need to by the end of the month, or just after the end of this month, beginning of next month, we probably don't need to go into various sites anymore. You just need to log in into your TenTrade Academy dashboard. So if you are already a client trading with TenTrade, then you have that free access into the dashboard, which provides you all the tools in one place. So then it will make it really easy for you guys to follow our mine and Toby's mentorship. And this is mentorship already going on to drive you through your daily trading activities, especially in trading days. So this is mentorship already going on as soon as you guys attend the webinar with me. And that will be further enhanced by your access into the 10 Academy dashboard as well, which will be yours and mine as well, and all the other traders trading box of tools. So all the tools are going to be there, of the analytical tools that we are going to be using to analyze the market every single day will actually be based on the 10 Academy dashboard. Okay, so all the cool tools will be there, your courses, certification courses as well will be there, all the educational videos, tutorial videos by topics as well will actually be there. All right. Okay, so that's basically it. Any questions so far before we just take a quick look at the top movers right here? Now, on the top movers right here, as I have seen it as early as 4 in the morning my time here as well, it has been quite steady to actually show the euro dominance in this top 10 board, okay, on this top 10 movers board. So we could see that it's predominantly dominated by euro crosses. The first two itself has got Euro AUD and Euro NZD. Then we go further down, we have got, not many now here. I think it has been overtaken with the Australian dollar, New Zealand dollar again. So, but we have got the dominance right there. But the clearest trend, as we can actually see with 4 dots here, is a GBP cross. We've got 1 or 2 GBP crosses right there, but we've got more AUD and NZD crosses. But we've got dominating the first two is your euro crosses, okay? But then the euro crosses in itself is dominated by both Australian dollar and New Zealand dollar. So in other words, Australian dollar and New Zealand dollar is the other ones that are dominating this top 10. And but if we marry that to what's going on today, for example, we don't have any Australian dollar and New Zealand dollar data, but tomorrow we have. So we've got the Australian data on global manufacturing, S&P, but then we are looking at Wednesday, or I think it was Thursday, yes, to have the retail sales of New Zealand. So yes, we do have that going through, but I'm not sure of whether or not it will move commodity currencies too much. It all depends on what goes on in the news, talking about their expectation of the symposium, and also the US economic situation, especially inflationary news related. Okay, any questions? Anyone have got questions? I'll just very quickly move on to the maybe a little bit too early to actually look at trend getting sort of marinated in the market, but it's no harm looking at. If you look at USD itself, on USD Euro, that momentum is building up to the upside. So for now, yes, it would actually be building up and up and up onto the value of the US dollar, I would guess, because if their intentions is to bring the inflation figures down, then it will take that time. So for now, it's probably going to be approaching some resistance level on USD crosses. So that hence the reason it would actually be looking like, oh, you know, it's got loads of bullishness. It has to have that bullishness to give room for that drop later on. So it may be, in my guess, approaching some resistance levels on the various USD crosses or major pairs. So we need to look at that through the lenses of technical analysis, especially. Right. Okay. So we have got Euro right there, USD, Euro USD on the downside there. And we want to look at the Euro figures as well for tomorrow. And we have got all these European figures, European data, especially from Germany. So I think the sentiments would actually be dominated by and volatility will be dominated by USD crosses or major pairs. Now we can actually match that with what's going on in the States and what's going on in Euro as well, in the European zone. So this is something that I would guess to be giving us trading opportunities are your major crosses. That means crosses or pairs that involves the US dollar. And one that is quite clear as well is the Euro CHF. So the Euro CHF on the downside for the Euro, though, mainly as a trend from a trends perspective, because here it is indicated that CHF is stronger than the Euro. So the Euro is stronger. Euro is weaker than the CHF, your Swiss franc. We've also got a nice roll right here, dark blue, and we've only got one there. It's the Euro CAD or the CAD Euro, but it's on your platform is Euro CAD. So here what it is trying to tell us is the bullishness of CAD against the Euro. And again, it would actually be confirming the trend as of now would actually be to the downside for Euro. Okay. And as you can see on Euro itself, all these dark rates are building up as well. So we've got predominantly Euro to the downside in terms of trend, but we need to confirm that from a trends analysis technically as well as technical analysis per se. Okay. All right. Hope it gives you guys a bit of an idea, and then we'll start picking some pairs and looking at what is going on now, because we have got the what do you call that, major crosses, right? USD crosses that we would most probably be focusing on. We can actually go on to the volatility chart right here and just be curious into which USD crosses would be experiencing more volatility in the market. So I will go into USD right here, click onto the 4-hour plus a daily, and look at where it would actually be shaded in purple, especially that's based on the daily chart. So we can see that we have got it stretched out closest to JPY, NZD, GBP, and AUD. So these are the four potentially volatile currencies that could actually be paired with the dollar and create volatility. So the NZD USD, the USD JPY, the GBP USD, and the AUD USD would probably be nice to actually monitor them from now and to look at where the impacts are. So I would write this down quite nicely as well. Of course, I would look into the economic calendar and match that up as well. So you've got your USD JPY as well, and then you have got your NZD USD and your AUD USD, right? So this is good for us to monitor the first four major pairs to actually monitor and do a trend analysis first. And also, I would look into GBP USD, USD JPY first for now, as we are expecting the data releases for these pairs, for these currencies. So with that, I mean, each one, even though we picked only four to do a proper trend analysis, these four could actually branch out to other correlated pairs that can then look into more pairs to actually trade just from these four first, right? So what I would like to do right now is very quickly to go on to the technical chart, the MT5 of TenTrade to do the analysis on GBP USD. Now, I've already done the analysis as of last week, and we have done it together into the, if you guys watch the recordings as well, we have started analyzing GBP crosses as of last week, mid-week itself, due to what we have expected at the time on economic data releases, right? So on GBP USD, for example, we have highlighted some areas of bearishness, right? From this rate line at 1.2055 right down to the 1.1580 area. Now we have predicted and analyzed the market to be bearish and predicted further fall, and it has actually fallen. We've also predicted that it would actually find some sort of stop or a bit of a reversal, or finding support at certain areas, and these areas have been marked as of last week itself with these three blue lines. If you guys can remember, you can always watch the recording, and I have explained that further of how I have actually come up with the three lines. So as you guys can see on the daily chart itself, perhaps we want to look at shorter time frame as well to look at the movements that could be clearer on shorter time frame. So here, for example, we could see that it has reacted to that line that we have drawn as of last week. And why did it actually just went sideways and just flirted with that horizontal blue line right there? Now, this blue line right here has been drawn for very strong reasons, with psychological numbers as well, with previous candles movement, and the price was at 1.1816. So that 1.1816 is really close to the 20 psychological number right there anyway, right? So if we zoom in a little bit and then we look at that candle right there, for example, has got the peak, the wick right there that has touched on 1.1780 exactly on the dot. See, so that's one of the psychological level. So that hence the reason we want to also really be sharp and apply the use of psychological numbers. All these tutorials on psychological numbers alone, on how to enter and exit the market using psychological numbers, will be in the videos that I will be creating. Okay, all right. Now we are looking at the next lines right here. So let's do a bit of a analysis, trend analysis on GBP USD based on 1 hour, 4 hour, and daily. So it's really clear for you guys. I think by now would already know that this is a clear sort of downtrend on the 1 hour chart for GBP USD, mainly because of the cluster of candles. Also the three lines, the EMA 200, 150. It's moving very nicely to the downside. Majority of the current candles are under all three lines as well. So that is giving us a nice bias to the downside for GBP USD on the 1 hour chart only. So we need to combine 1 hour with 4 hour and the daily to give you a consequential type analysis on the trend. So these three has to actually match to give you the similar picture. Then we can say that it's still on the downside or being bearish. Okay, so it's the same for GBP USD on the 4 hour chart. Now we have got that slant down or that slope to the downside on all three EMA lines, which is a good sign that they are not, entangled or giving you signs of uncertainty. So what we need to do now is to go on to the daily chart. Now, on the daily chart, as we zoom out a little bit, it is giving us a very, very nice and clear downside or bearishness of the GBP USD. Now, collectively, now we can say that it is quite smooth and clear to the downside for GBP USD. But of course, we want to evaluate to the left by looking to the left on any possible retreat of the sellers. That means a bounce to the upside or not by looking at previous candles to the left, whether or not at this area of where I'll just get rid of all these three lines. I still want to maintain this zone between the two red lines as your bearish zone. That was actually discovered from a bearish candle from a big time frame, right? So that's also covered in the video. So if you guys want to watch it again, at any moment of time, you can actually watch previous videos to get that whole connection from one video to the other video. Especially, it would actually be giving you that connectivity if it is talking about the same pair, especially. So on a Monday, if we have talked about GBP USD, would connect with it on Wednesday and Friday as well, just so that we can connect the dots together and look at the follow through of prices and trend. Okay, right. So here we have got, I would look into the average directional movement index as well, ADX, and just look at that blue line on the daily chart itself. It's looking like that downtrend is really strong. It's got strength in the downtrend, right? So that movement would be expected to drop further for GBP USD. Now, if we look at the 4 hour chart, we could see it's really high, really straight, and to the upside, that blue line indicating very strong trend. And that trend that we are looking at right now for GBP USD is downtrend or bearishness. Is the same as well for the 1 hour chart. So here, because we have got ADX as well, looking really nice on all three time frames, then we can say that, this area right here has got a higher possibility of prices coming down to this level at 1.1580 area as well, right? So, but also if we look at the daily chart, the reason why it's got a little bit of a pause right there, it's respecting the previous support area right there. And also we are looking at the current price at 1.1815. So that is just 5 pips away from the 1.1820 psychological level as well. So this is really important for us to understand all the movements and the respect of current price to psychological levels as well, just so that we know that whether or not it would actually be reversing at this moment of time, or it's got this whole room. But trend wise, it's really strong. That's a good sign. So if we go on to the daily chart right here and just look back a little bit, we can see that the two red lines to create that zone for us, this is still a selling zone right here, right? Is based on that bearish candle. So I want to highlight that here. So this whole area right here is now a bearish zone. Okay, so it's got room, it's got strength as well as given by the ADX, right? Okay, there you go. So I've got it here. and that's on the daily chart. So if we go into short term, for the shorter term intraday type traders, for example, let's look at what we can actually analyze there in within that zone. Now, in within the zone itself, very, very smooth on the 1 hour chart, right? What we need for the sellers to hint us that more sellers are coming in is for the price to go under 1.1820 by at least 10 pips. So that means we need to look at prices visiting the 1.1810 area and go under it. So when that happens, then it could actually trigger our price for further sell at 1.1810, or we can actually be more conservative in trading by trading only when prices have actually gone under 1.1800, which is another major psychological number. So the next point of sell, if you were to be conservative in your approach, is the 1.1790 only, right? So you could actually sell either at 1.1810 earlier, or you can sell later and do a pending order perhaps at 1.1790. Okay, so here, let's just zoom out a little bit. Now we can see even on the 1 hour chart, this is the area to pay a lot of attention to, because as your eyes travel to the left, that is your most significant support area right there, right? This one here, very, very major. Why? Because if you take it right through there, that support area there has taken price up by 500 plus pips. Okay, that's quite a significant move on the 1 hour chart as well. So that movement right there has to be paid a lot of attention, that whole upward type movement right there. Now, in my personal opinion, it looks like it's got a double top type more than a sharp pattern, right? So I will speak to you guys a lot on patterns that I can actually see as well, and we'll share that information, and then we can then trade, in stages. So when prices have actually gone up to this point and then start coming downwards, and right at this point roughly, then I see that at that time there was still some very good selling opportunity, but through a different pattern at the time. Now that time the pattern was a geometric ABCD pattern, and that was from here to here. That was the A to B, and then B to C, and then C to D is where we would actually be trading on. So I just want to demonstrate a little bit on the geometric patterns as well, just so that you guys can combine that with your current strategies as well. So that would be my A to B right there. Okay, but I'll take it right here as a better support right there, right? Or a low. And I'll take that one there right up to the wick. So it's wick to the wick, right? So we draw a very simple line there. But then what I do next is I'll start off with a normal common ABCD pattern anyway first. And I just click on my control and I mirror that A to B length to the C to D length to actually then help me predict where roughly could that fall be. And that fall usually could reach potentially to the D point right here. So that's your C, D. So AB's length equals to C to D's length. That's your normal ABCD pattern, right? So then I would just go on to draw that B to C there. So as it stands now, this would actually be your ABCD common pattern. Then if I want to convert that into my copyrighted pattern, which is a geometric bearish ABCD pattern, what I would then do is to combine the A point right down to the D point right there. Now, the reason for that is because trading a common ABCD pattern, you are not given an entry area or a hint of where you could actually enter. You have to enter with your own strategy, maybe guessing as well to actually enter the market. But once you've converted that to a geometric ABCD pattern, then I could see that that cross right there it's called a centroid, which I have named it myself. So that centroid there, let me just color it yellow or something like that. Okay. There you go. So that sits right there at the crossover between your B to C line and your A to D, right? So that gives you a potential entry area under this line. So the entry would actually be anywhere under 1.2076. Now, 1.2076 or 77 is really close to the 80 psychological level anyway. So an ideal entry point would actually be 10 pips under 2080, which actually gives you a better or an ideal price of 1.2070. Okay, so I'll just mark that at 2070. Okay, 70 right there. So that would be my ideal price. I've taken that trade personally already with some traders as well. They've actually taken that trade. So that was my selling and that was my take profit above that 1.1876. So I would have taken the take profit above the 1.1880 psychological level. So that would be at 1.1890 instead. So I'll just mark that as my blue line right here and 1.1890. Okay, there you go. So now we have got this area right here, and we've taken that trade very successfully. Of course, it's based on the 1 hour chart, but that trade itself started triggering, I would think, at on the 18th of August, right? So that 18th of August right there, and then it hit on the 19th. So that was just about a day or so, or maybe slightly more than a day, but that is about 170 or 180 pips worth of a trade right there that has been taken. So that's roughly how it would actually be looking like for you guys as well, trading a geometric ABCD pattern from a normal ABCD pattern if we spot that pattern. But then together with this ABCD pattern and the geometric ABCD pattern, we've also got potentially a shark type pattern as well, let's say, but not a shark pattern here, but more double top type pattern that have actually indicated lots of the room to the downside anyway, right? But then we need to always have the fuel prepared for you from a fundamental perspective. So that fundamental perspective is really important. And then your trend analysis as well, in order for you to pick the right pair to actually trade, to actually then ascertain better movement, faster movements for you, and faster reaching of your take profits as well, right? Okay, so that's basically it on GBP USD. Just wanted to give you a little bit of a hint there. Now, we can go on to gold as well a little bit, just so that we are clear on what's been happening with gold. And we just want to take into account what's been happening in the States, especially with inflationary rates. So as I've mentioned earlier on, there is a chance for US dollar to actually drop with the inflationary situation being cushioned, and that would then spark potential uprise of gold. Okay, so let's take a look at whether or not this is a possibility or not, because we know that fundamentally this is a possibility. We need to confirm that possibility technically as well. So let's also go on to the indicators list and object list, sorry, and let's get rid of all these funny lines there. Okay, and for 88 for the stocks, just delete that. Okay, so very quickly, let's take a look at trend analysis for gold. Gold really clear, you know, looking like on the downside on the 1 hour chart. Let's compare that to 4 hour. Now, when 4 hour comes in, we could see that entanglement and non-clarity. So that is a sign straight away that there is a potential reversal, or we have to be careful. Maybe it goes on sideways, but it is a sign that it may not continue so fast, so quickly on the downtrend. So what we need to do as well is to look at the daily chart, and we can see that the daily chart itself has already indicated a bit of a sideways possibility just from the way the three lines are actually moving to the sideways as well. Now, here, for example, if I were to zoom out and we just take a look at it from a big pictures perspective, we could see that we have got several, like especially this one here, most recent and big movement of gold to the upside from this level of support right here. So immediately what you can do is to always mark that area very quickly from the lowest body right here, and also the lowest or the longest wick that you can see there as well. So once you've done that, then you've got a zone right there, and that is your support potential zone. And price is now approaching it, or very, very close, approaching that area of support at 1726 to 1720. Now the current price of gold is at 1732. So loads of traders have been actually asking me about gold and whether or not I could see gold moving upwards from combining fundamental factors and then what we can actually see on price action, on various other technicalities of gold. The answer to that is a very strong yes, that we may be looking at a bounce to the upside for gold anytime soon. So hence the reason we need to play really carefully in understanding the timing wise, especially with the Jackson Hole Symposium, when it runs from Thursday onwards. So then news will actually start to be released, and then all the gossips of the market will actually come in as well. What are the sentiments that the news have actually been passing on towards? Is it risk on? Is it risk off? Stuff like that. So if it is a risk on, you're turning on the risk, that means you're going to be more risky. But if it's a risk off, that would actually then mean that traders, investors would actually take their instruments or their assets and investments out of risky ones into safe havens like gold, JPY, and also CHF, to some extent to the USD as well, right? So, but especially gold at this moment of time. Now, the market's been waiting, investors, traders, retail traders especially, has actually been waiting for, quite a long time before they have actually seen a steady rise of gold. So we've got a lot of stock orders, for example, and they're stuck onto their buys for gold, and also on the cryptocurrencies, especially Bitcoin and Ethereum as well. So there's some expectations on these assets as well, right, for an uprise or upward type movement. Okay, so that is it basically. So if you are already selling, then basically you know that there's these two lines right here at 1726 and 1720.59 are the area of possible probable support. So you want to exit the market before it reaches these areas, basically, right? The blue lines. And only if it pierces through these lines and then looking like the fundamentals have driven it to the downside much more, then we can actually look at further upward type movement. But the second stage of the support based on the daily chart is marked here, this area right here, right? And it's very, very significant as well. And there you go. Starts off with this area right there, major, but if it were to be slightly earlier in its retreat before reaching this area, then it could also be slightly above based on the most recent type support action right there. So I've got some lines there, right? So now we've got 4 lines there indicating support zone. Okay, so you can always color that line as well with a blue to indicate a blue support zone as well. So let me up objects. Okay, so I'll mark this area right here with potential support, but we need to color this blue. There you go. Perhaps darker would be better. Then you can see your lines as well, roughly. Okay. I'll just zoom out in a minute. Give me a second. Zoom in, sorry. object shapes. Yeah. All right, this is based on the daily chart for gold, and I just want to mark all these areas of support so we can always monitor them together. Okay, so there you go. We've got two areas that we could expect a bounce. It all depends on fundamental factors as well, what's been driving the gold market, whether to the downside or further downside. If it does actually go further downside, then it would find support only later on here at 1696, but that is, far away. So I would guess that it would have some supporting buying power right here. So how do we know whether or not it's got a bit of a buying power right there is to always look to the left as well. I like looking at the weekly as well for gold, and you can see that this area here has got a mother candle opening price exactly at the area that we have actually drawn. So, and it's got that support right there, but mother candles, bullish mother candle is really going to be your hint of whether or not it's got the power right there. All right, so there's some right here, not too much upward type power though. That is the thing. And here, for example, could actually be even a resistance at this area right here. But I'll mark closing price of the mother candle as a red potential resistance as well. There you go. Okay, and another one is here as well. Right. So that's basically your trading areas already drawn up for you for gold. And just your risk area, your area that to pay attention to. So you've got your blue areas right there. These are your potential support zones, and your red area right there are your potential resistance zones. So change the color there to red to mark the other one. Okay, so this is how I would map out basically your trading areas, your resistance zones, your support zones. So then we would actually be clearer in our mind of where price will take us through in which area, and then we know what exactly to actually do. So if it does actually come downwards here and start bouncing upwards, then you know that it wants to basically go upwards, and that has actually been quite successful in a downward movement on a support striking upwards. Then that would probably mean that it's time for it to actually go up and meet that resistance area right there. So you would need to exit basically closer to the resistance there. Let me just mark this area as well. So it's a little bit earlier. There you go. Oops. There you go. Just not letting me mark it properly, but that's it. That's giving you that whole idea of where that zone is. Resistance zone, there's a support there, further support right there. Okay. All right. Questions, guys, before we end the session for today. I hope that's been helpful for you guys. That's your daily chart for gold. It's been mapped out quite nicely based on all the price action, especially on various time frames, candles as well. There we are. All right, guys. Questions? Any questions? You guys okay so far? So good? All good? Toby, all good?
Yes, all good.
All right. So you've got questions here. All good. Okay. No questions at all? Anyone will be interested in trading gold today, or looking at any trades for today at all? or would like to ask questions based on your trades? No questions? You guys are very quiet today for a Monday. Monday blues. Price action wise for gold is looking more clear and nice on the daily chart. So hence the reason. GBP JPY, would you like to take a look at GBP JPY, Peter? Okay, let's take a look. Brilliant. Okay, so looking at GBP JPY, let's get rid of these lines. We've got some lines already drawn as well. So on the 4 hour, very quickly, it's on a sideways. So we go into the 1 hour chart and we look at it, and it's not looking good in terms of trend on GBP JPY. It's looking like the three lines are signaling us that it could be moving onto a sideways type trend, or it's very uncertain of its clarity and its strength of the downtrend at this moment of time. And it's actually confirmed that it's in confusion mode because the current price is within the three lines on the daily chart. So it's not a good pair, I would think, to actually trade at the moment because of unclarity, and also strength of the trend may not actually be there as yet. Okay, so this combination of currencies making it a pair may actually not be a very attractive pair to actually trade, especially because it's not giving us very clear and strong trend as well. Right, that's the first thing that I can actually see. So I'll get rid of all these lines for GBP JPY, but that's my very quick conclusion just by looking at that, because what usually happens amongst traders is that sometimes when trend is not clear and it's not strong, it's probably best to move on from there to find other more moving pairs and clear in trend type pairs, as opposed to hanging on to a trade like this where there's a lot of uncertainty, and then it'll block your time and basically make you miss out other opportunities elsewhere. Parameters for the moving averages used, it's the 50, the 100, and the 200 as always. Yeah, I've been using these parameters. It's EMA, exponential moving average, and it's 50, 100, and 200. Been using it for quite a long time now, but it's not for entry, not for exit. It's mainly to indicate trend, at least on 3 consecutive time frames, to get an overall trend picture. So it's for the trend analysis, not for technical analysis per se, right? So for trend analysis, and not to cross over or to enter the market or exit the market with it. So I don't actually use these moving averages for these purposes, only for trend indicating. Okay. All right, so nothing much there on GBP JPY. I would think it's probably best for us to look at the action Forex as well. And then, as I've mentioned, you want to pay more attention to the 4 pairs. GBP USD, USD JPY, NZD USD, and AUD USD as well. And then we do a trend analysis for these 4, and whichever that has strong trend, good opportunity, then we look at correlated pair to the ones that have got a strong, clear trend. Okay, so GBP USD could actually be quite good. What we will do is also to incorporate a correlation tool, but the ones that I usually use is the one at Mataf, and it's called, the name of the website is Mataf, MATAF, and it's been quite good in terms of just giving me a hint of which pair is correlated positively or negatively with which other pair. So since we have looked at GBP USD, for example, or even I think it was GBP USD, to be clear, and on various time frames especially, then we can look at what other pairs are correlated highly with GBP USD, so we can do analysis on them as well. So here, for example, we just look for the highest number right here, and if it is green or positive, that means it's positively correlated. If it's negative, then it's negatively correlated. So here we have got, I think highest number is 83 right there. And then it's just to give us a hint, not like we don't need to be scrutinizing this tool and see how accurate it is. No, we don't need to, because we are going to be doing the trend analysis ourselves anyway, right? So we need to confirm that. So that one there does connect to GBP CAD on that one there. So we can always look at GBP CAD. Now we go on to here and we go on to, let's say one pair right there and change that. GBP CAT 83. Yeah, let's say it's GBP CAT. So we go into GBP CAT there. There we go. And we'll take a look and we'll see whether or not our trend analysis would be giving us the same hint that it's correlated to GBP USD. So as we can see on the daily chart itself, very nice, very smooth downward type movement. All the three EMAs, as you can see, flowing downwards on the daily chart very nicely. Let's look at the ADX as well for the strength of trend. We can see it's not just yet on the daily chart, but it's heading towards the 25 level. So not just yet being strong on the daily chart in terms of the trend, the downtrend. On the 4-hour chart, we are looking at some indication of downward movement, but you can see that the movements are quite similar to GBP USD as well, and from the way it moves. So yes, so this could actually be literally another pair besides GBP USD, since it's positively correlated, to be another pair to actually open up a trade for whether it's a pending order or a spot trade. So yeah, that's basically it. But it's just that for GBP CAD, it may be mirroring the GBP USD, but not yet there in terms of the strength of the trend. The GBP USD has already hinted the strength of the trend through its ADX and various other areas, but GBP CAD may be a pair that is correlated but moving a little bit slower. So it could actually be your later on pair to add on once you're successful with your selling of your GBP USD trade. And this could be an additional one because it's actually moving a little bit slower, but it's picking up and correlated positively with the movement of GBP USD, right? So here, if I go into the daily chart, it's only the day, it's the 4-hour chart, for example, has got the hints of a strong trend anyway already, because of the blue line on the ADX is above the 25 level. So that's a good thing. It's just the timing wise, maybe not just yet. So here, if I go and maybe the weekly chart to go to the left. Oops. The data is coming through very slow. Right, we've got there. We've just got on the GBP CAD as well. We don't find as clear data to the left in terms of bearish mother candle to the left as well. It's not really happening on GBP USD. Sorry, GBP CAD. As you can see, we need to upload more data and to look further back as well. So yeah, that's basically the limit there. But there's always ways to, it's downloading the data quite slowly. Right, so we've got some indication right here, similar to GBP USD as well. The whole area right there of support. What is blue? Right, done. There you go, and all the way down. Here, that's your bullish area right there. Give me a second, guys. I'm coming back to your question. in a few seconds. Okay. So we've got some bullishness right there. We've also got this area right here. Support areas. There you go. There we go, guys. Okay, yes, you've got a question right there. Now you guys are coming up with all the pairs. It's good to get onto it as the market is moving, to get onto it in the middle of the session, especially, or even in the beginning of the session would actually be better. All right. So we have got GBP CAD right there. Now we'll look at USD CHF a little bit. And let's take a look at USD CHF as well. It's okay, Victor. Thank you. All right. So we'll look at USD. It was USD CHF, was it? Yeah. Okay. USD CHF, yes, it's a good one to look at, but I would love for you guys to also focus on the four pairs that I have actually mentioned. So try to practice on to GBP USD, USD JPY, NZD USD, and AUD USD on trend analysis, sector analysis. Any questions you have on these four would probably be quite good, because from these four we can actually branch out to a few other pairs to actually trade. But this is what it means by following what the big boys are doing, as opposed to just picking out pairs that you think you should be trading. We should be trading pairs that the big boys are actually trading, from fundamental, from the news, from the tools, heat maps, and the top 10 movers. These are hints from what the big boys are actually doing, right? Okay, so let's look at USD CHF. Did I miss it somewhere? Should be up here. Yeah. Okay. There you go. All right. So USD CHF. Let's take a look now. From the 4 hour itself, it's not very clear, not very nice in terms of trend. We've got the 3 lines sideways, and then we've got the candles just moving slightly above the 3 EMA lines. So let's take a look at the 1 hour chart. Now, 1 hour chart's giving you that nice clear upward type movement, right? Then when you compare it to 4 hours, look like a bit of a stop. So that basically means, there's a bit of a die down of the uptrend of the USD versus the CHF. Then you look at the daily chart, it's just a different picture altogether. So that could potentially look at USD CHF to the downside, or moving from to a sideway and then weakening the uptrend and then moving to the downside. So there is no clear trading opportunities, and mainly because there's just no clear strong trend as yet at the moment. As you can see, 1 hour does not match with the 4 hour, does not match with the daily. So it would be best if we stop right there on the USD CHF, don't look at it yet, and then focus on other pairs that are actually moving at the moment with more clarity. This would actually be saving your time a little bit more, rather than getting caught up in the spin of what is not clear, right? And what is not strong as well in terms of trend. So there you go. That's my USD CHF analysis for you, Peter. Is that okay? Good. Okay, guys, I think that's all I have for you guys. So let's end the session for today, and we'll continue on Wednesday as well. And basically, any questions you guys have, please do get in touch with us, and get in touch with Toby especially. And you guys, we can then come up either with a video tutorial straight away, a live video straight away, to alert you on movements and stuff like that. Okay, guys. All right, guys, that's all I have for you guys. So thank you very much for attending my webinar today, and we'll see you guys on Wednesday. Now, have a great trading week, and happy pipping, guys. Take care, guys. Thank you so much. Bye-bye.